Hello and welcome to another episode of the Construction Corner podcast. I'm Dylan. I'm your host. And guys, today we are going to be talking about Finance 101. And because this week is also Thanksgiving, I want to wish every one of you a happy Thanksgiving. Hopefully, you're able to spend time with your friends and family. But if you're also working, I want to thank you too. Thank you for getting out and working. It is an honor. It is a pleasure to work, to have work, and to be able to provide for yourself and your family. So thank you if you're working this week on Thanksgiving or Friday for some of you. Again, thank you for working, for putting in that time. And for those of you that are spending time with friends and family, enjoy it. So without further ado, we're going to talk about Finance 101. In Finance 101, we're going to talk about a few different things. One is going to be really in being able to set hourly rates for yourself, for your people. One, you got to make sure that they're competitive and you're still going to win projects in your area. But two, just how you figure out that math and what to set hourly rates at for your people and what really goes into an hourly rate. After we set an hourly rate for our folks, we're going to look a little bit about estimating and doing kind of an estimating 101 class, if you will. Again, this is all going to be fairly quick, fairly abbreviated, but we'll keep diving through a lot of these finance things because, again, I think finance is really underestimated, and estimating in general is one of those items that I think gets missed a lot. It will either make or break a company. A lot of people don't really understand what goes into it and all the math that they've got to account for to make those jobs profitable. And then two, it's some of the cash flow things that we'll get into it as well. So we're going to go through, again, hourly rates, estimating a project, and then we're going to go through some productivity pieces and how you can see your profit numbers increase by like 300%. It gets kind of crazy when you look at the gross profit numbers versus what you can boost your actual profit number by, and not just your revenue percentage. So there's a little bit of what you think is going to happen and what actually happens when you work through the math. And so I want to work through some of these numbers with you guys here today to make sure that it makes sense. So this is also on video. I got a whiteboard with me, but I'll do my best to explain for all of you on audio what's going on and what's happening. So without further ado, let's go through some of these numbers. So in putting together a hourly rate, there's a few things that you've got to incorporate into that hourly rate. So we're going to start with a guy that, and we're going to make a lot of these kind of nice, easy numbers, if you will. So let's say that we have a guy that makes $100,000 a year. So we've got 100 grand, 100 grand, 100K. And that means that this individual is going to make $50 an hour. So the easy way to do this is take whatever your salary is, divide by 2,000. So it's just divide the first number by 2, rip off the K for 1,000, and then that gives you your hourly rate. So roughly people work 2,000 hours a year. It's really 2,080 for just a 40-hour a week person. So we want to make it simple though, and we use 2,000 hours to do that. So an hourly rate of $50 for 100,000. But on top of this, you're also going to have, so that's like their take home pay. There's going to be health insurance, what the company ends up paying. So a little unknown fact for most of you guys at home is, so if you make $100,000, but you have, you're still paying whatever, $1,000 a month for health insurance. The company is in a lot of cases paying probably double that for your health insurance premium. Health insurance is incredibly expensive. This is like 2, 3, 5 grand a month for a family. So for a lot of you, the company is actually bearing a lot of the burden of your health insurance costs. So just understand that they have a huge basically tax on them for health insurance. the next thing is they've got Social Security tax, owners basically tax on that, on your wages that they've got to put into, if there's a 401k match or anything else that they've got to put into. So really this ends up being like a 30% increase of whatever your base salary is to basically cover health insurance, uh, Medicare, Medicaid, Social Security, like all those basically taxes that we have onto salaries. And then the business has to cover a lot of that for the individual person to make 100 grand. So then this person's effective salary ends up being really 130K, which then goes to, you got to add $15 an hour. So it's $65 per hour is really what this person ends up making at the end of the day, and what the company should account for. So we've got $65 an hour. And then the other things that we need to start accounting for in this person is overhead cost. So if you have an office rent of, let's say your office rent, total rent expenses, including rent, utilities, everything else that goes into it, is $10,000 a month. That's basically all the overhead cost amortized for your rent. If you bought a building, paid for furniture, all that kind of good stuff. Then, so 10 grand. And let's say that you've got 10 people in your office. So this is really another $1,000 per person per month. And in that, you can say 22 days. We're just going to use 20 days for easy math. 20 days per month. These are working days. You really have 22 working days. And for a lot of you guys in construction, it might actually be 30. So with this, you have another $50 per day divided by 8 hours. 4.5 dollars, right? Or 550 an hour, roughly, right? For this. So this 65 now goes to 70. And then if you've got company insurance, anything like that. So if you've got another, let's say your insurance, again, this is all going to vary, but these are all the things that you've got to add into this like number of what the actual cost per person is per hour in your business. So if this is, we're at $70 now. Let's say you've got another $5 in insurance costs per hour. You've got another little bit if they've got a company truck, anything like that. That's another $5 an hour. Again, all in working hours, billable hours for that person. So this really now goes to 80. And then let's say that you want to ultimately make 20% in bottom line profit. So you need to add, it actually ends up being like 22, but we're going to say 25% increase in this. So that's going to add another quarter, but by $20. So you would need to charge $100 per hour minimum for you to break even. Usually there's a lot of other overhead pieces in this. What's your admin staff cost? What's their billable? Well, usually admin staff is not billable. So therefore you need to add in all of their salaries. If you're paying commission on anything, so if you're billing out at $100 an hour and you're paying a 10% commission, so you now need to add another $10 in that for your commission rates. You need to add probably another 10 to 15 in here for, let's just say this is commission. The other 10 for admin. So you can see where 125 per hour is like not unreasonable to cover costs or anything like that for folks. So this 125 ultimately is like not that bad of a rate, and probably to cover some other costs, some other stuff that comes up unexpectedly. This person really should probably bill at 150 per hour, but you'll still make good money at 125. You'll still have your profit covered. You'll still have your salary expenses covered. And more than likely, you're going to have your admin covered as well. So usually you want to have a multiple of, usually want basically 250,000 per employee is kind of what you want to be at. Some of you, that might be 200,000. So if you look at 250K per year in revenue, that means that they're fully utilized, all that kind of stuff. If you're billing at 125, that you double it with the 2,000 hours, right? And so you take 2,000 times 125, and that'll get you to 250,000 a year in revenue per employee. But if there's time that they're unbillable, things like that, you probably want to bump it up to where you're going to be covered. So this 150 would now be 300K per year if they're fully billed, right? Fully utilized, every hour that they work is actually billable. Then that's 300K. And then you have a little bit of a buffer for them and what they're doing. So this is all the math, all the things that you need to know to ultimately understand what the billable rate should be for your people, how you should be thinking about billable rates, and the dollars and cents that goes behind it. You need to know what your admin people make and cost, and like fully weighted hourly rate. You need to know what your insurance rate is, what your rental rate is, what your Medicare rate is, like the fully weighted hourly rate for these guys that we did to start here. And then what you need, what you're paying in commission, what you're paying, like how much time is that person actually billable? Are they billable 50% of the time, 80% of the time? What's their billable rate? And how effective are they? So this is all for the billable hourly rate type work. And we need to very much understand what's going on here. So now I'm going to wipe the slate clean, and then we'll start to work through what you would put in for estimates and things like that. And you're going to do this for basically every person on your job site. Some of these numbers are going to carry over, like commission, admin costs, things like that will carry over. Health insurance rates, rental rates, all that type of stuff is going to carry over for each person in your organization. So it's not that you have to rework this all for every person every time, but you want to have a good understanding and ultimately good baseline of all these numbers, all this math, so that you have a good place to start from. So you're able to make the determinations of what their hourly rate should be, what you can realistically afford to pay these people, and how you're able to move forward and put bids together so that your jobs are profitable. So again, if you're a kind of solo guy, that's a little easier maybe to put together. But at the end of the day, you still want to know your numbers, know your costs, and everything that goes into putting a billable rate together that's still going to win you jobs, right? At the end of the day, you got to win the job for you to make any money anyway. So let's take another project, and let's say that you're going to operate a bulldozer and you're going to clear a field, right? So a bulldozer rental rate, let's say that that's, and I did look these up. So, but again, don't use these rates as gospel. You're going to need to check with your own equipment supplier. There's going to be the supply demand of those guys and what it's actually going to cost you for anything moving forward. So you just check with your local guys. But for this example, we're just going to say $500 per day. So in a we're going to use 10-hour days here. So 10-hour day. It's $50 per hour. And if we're going to use 8 hours, right, this obviously goes up to I think it's closer to like 75. But anyway, $50 an hour is what we'll start to use in a 10-hour day. So with that, we're going to say that same guy, we're going to have $150 per hour. And that's our operator rate. So $150 per hour for that guy that's making $100,000 a year. So $150 an hour plus the $50 in costs. So then it's 200 here. The things now that we have to incorporate into this is you're going to have to pay the rental company. You're going to have to do that immediately. And you've got some carry cost on basically the money that you're going to have to operate with that. So if this guy works a full 10 hours, so that's $1,500 that you're going to have here plus the 500. And then let's say that this job is 1 week long, right? So this times 5. So this is $10,000, right, for this project. But you're going to have some carrying costs. So you're going to have a basically, cost of money. And I'm going to use 10% in these carrying costs because the cost of money is pretty high right now. And you're not going to get paid for a certain amount of time. And then you're going to have to basically go after the next project and carry this money forward too. A lot of the times we forget carrying costs and the cost of money. What it costs to not get paid for an extended period of time is quite costly. So we need to include some carry costs in here for these projects. And this is something that, again, doesn't get covered. Usually you're doing a base rate here. You're not making any money to have to pay for that rental for the day or carry any of that costs. So you really should have a markup in this side of things too. So really this on a 10-hour rate should end up being instead of 50, this should really be probably like $80, right? You need to carry some extra cost in there. And we've got, usually you're going to work an 8-hour day anyway. So there's that needs to be carried through here. So, but if you add, so if this goes to, we add basically $300 in here per day times 5. So we add 1,500. So this, instead of being 10 grand, this would now be 11,500. And if we do add our 10%, then this, we're going to add another 1,150 bucks. So this then goes to a $12,650 deal. So that 12,650 would be for a week's worth of bulldozer work, right? But then we also have to add in fuel. What's the fuel burn per hour for this job? What's it cost to transport? What's the time to unload, offload, all of that? So this job, you probably, let's say that it burns 10 gallons an hour. I don't actually know the burn rate of a bulldozer, but 10 gallons per hour times 10 hours times 5 days times, we're just going to use $5 a gallon. So you've got 100 gallons per day, 5 days. So it's 500 gallons times 5. So that's $2,500. So you've got a fuel cost of $2,500. Now, is anybody coming out and filling this thing up? How are you getting fuel? What's that cost? So maybe this ends up going to like $3 grand because you've got costs in there to get fuel, bring fuel, all the other things that go into, again, a project. And it's little things like that. There's $3 grand, right? If you didn't have this $3,000 in here, that's real cost. Now on this project, and again, you're only netting $50 per hour. So 50 per hour, right, is the net to the business times 10 times 5. So $500 per day, 2,500 per week. You just lost money on the entire project with not dealing with fuel. Like, you just went from making $2,500 to losing $500. Like, that's how quickly you start to lose money on not including things like fuel into your budget for a project, right? And estimating. You went from making money to losing money and did that with one missed line item. So that's how important this stuff is, guys. You have to be very detailed in including all the costs associated with that project. So that $3,000, now this goes to 15,650. You need to have probably some buffers, some other things that you're not including in it. So this probably goes to $20,000 for a week's worth of bulldozer work, right? So we need to basically encapsulate every cost that we can think of, add it all in there, and then still add our additional buffers for things that don't go right, not being as maybe productive as we thought. Maybe it rains, you have an extra day or two on site, and you're going to have to pay that $500 to the rental company for keeping that vehicle. So whether it's a bulldozer, skid steer, whatever it is, you're going to have to incur that rental cost. So making sure that you're able to withstand any of these little items through a project, and not worry too much about it, that you're covered in your costs, but it's got to be included down here as to, some of the unknowns, but it's an unknown known, right? Meaning that we know something is probably going to happen. We don't know what it is, but we can plan for something happening in a project and basically account for that cost as we go through it. So again, this is just kind of estimating 101. This is a very simple, basic project. This isn't anything crazy for it, but you can see, like, having fuel or not accounting for fuel really can wreck your project one way or the other. So really take this into account for each and every one of your projects, and understanding that you need to be this detailed in putting an estimate together. It really will, again, make or break your projects in estimates and putting them together and doing this very simple math. But you just got to have the details for it, right? You got to be able to do some simple multiplication, maybe run an Excel sheet, right? Like, this doesn't have to be that complicated, but you have to be able to account for all the things that are going to go on in that project, and ultimately make it successful. So this is, at the end of the day, what we can kind of expect from a project standpoint, and having everybody win. Now, here's something that I do want to talk about when it comes to productivity and software. So on the Cowabunga Studios side of things, right, we create software to make people more efficient and effective in Revit for their electrical construction documents. So with that, in making people more effective, we really got to think through the math and how this pencils out for projects. But this could be any productivity tool, right? Anything that you find to be more efficient, more effective for your guys, and really how much it can save you on time. So something as simple as 15 minutes a day times, so 0.25 times 20, I'm going to use just 20 working days, equals, really simply, so divide by 4, that's 5 hours per month. And then if you take that billable rate 150, so that's $750 per month saved. Right? Like, that's a true hard cost if you're save 15 minutes, right, per day, 20 days, and really you save an extra half hour in there. So we could add another 75 bucks to this. So this really becomes 825, right? Per month saved for just 15 minutes a day, right? On a $150 billable rate. So 825. So if you had something that was half of this, right? That'd be worth it. Even if you save that 15 minutes here, because you'd still be able to work that 15 minutes back. But we're going to go through some math here to help illustrate this point. So that's a really simple example that we're going through here. But let's look at something maybe a little more complicated. So if you're able to work, again, 8 hours times, again, we'll use 150, that's 1,200 bucks billable per day. Right. So 8 hours a day, 150 bucks an hour, 1,200 bucks a day is what the billable rate and what you can charge basically per day for that time. Now, if you're able to use some software, some technology, better bulldozer, right, where you're able to do 50% more work, so you effectively 12 hours times 150, that now equals 1,800 bucks per day, right? So you're 50% more effective. And so now you have $600, but this drops right to the bottom line, right? That increased productivity drops right to the bottom line. You've accounted for all of your overhead costs, everything else in this first number. So this $600 delta drops straight to profit, which is why when in the intro for this video, I talked about having a drastic difference in your profit numbers versus your revenue numbers, right? This is only a 25 or a 50% increase in revenue, right? But it's going to be a massive impact to the bottom line. But let's say that you can only do this every other day, right? For some tool, again, like Cowabunga Studios, we do it for a single project and we really save you all that time up front right at once. So maybe you only use this, half the days of a month. And let's take a look at that. So let's just, again, for just simplicity's sake here, say that you're 25% more effective. So on a basic month with working 8 hours, 150 bucks an hour, 22 days is what we'll use. So 22 days per month. On a basic standpoint, you're going to make $26,400 per month. This is basically the baseline criteria for billable, right? If you're 100% billable, 8 hours a day at 150 bucks an hour, that's 26,400. But if for 11 days of the month, you're able to basically produce 12 hours instead of 8, only working 8. So your cost is only going to be 8. So on these 11 days that our base is going to be 13,200, right? Half of 26. And then the 11 days per month that you're more effective, that's going to be 19,800, which bottom lines to 33,000 per month. So the delta here is going to be, if you're 25% more effective every month, you'll net. So the delta is going to be $6,600 per month. So I'm going to clear the board here, but $6,600 is what we're going to remember is our delta. And then our net profit, let's say, is 10% on a typical per person per month, right? So net profit is 2,640. Yep. So let's clear the board here. And in doing this, again, what we're going to show is your total net increase in bottom line profits. So remember, we have a 25% increase in productivity. So 25% increase in productivity. You'd think that that would only increase your profits by 25%. But because of the increase in productivity dropping straight to the bottom line, you really have a huge difference in your bottom line take home net profits. So we go from 2640 to we add $6,600. And actually, let's say that there's some cost associated with this $6,600. So, like in the case of Cowabunga Studios, and then this is all on a monthly basis. So, in the case of Cowabunga Studios, you pay $1,000 to add this $6,000 to your bottom line. So minus $1,000 a month. So this ends up being $8,240 is what you put to your bottom line per person per month, right? With that productivity. So that 8,200, 8,240, and you went from 2640 to 8,240. Now, from a percentage increase in bottom line profit, right? Net profit, this is a 312% increase. 312%, right? 8640 over 2640 gets you 312% increase, not 25, 300% increase in your bottom line number. This is what a productivity increase really gets you, is these huge bumps in your bottom line take home. So the thing here is you have to know your numbers. You have to run the math, because some of these things that would seem intuitive, once you really run the numbers, they aren't. This is not necessarily an intuitive leap in what your net profit is going to be from increasing your productivity on a single project. So we really have to run the math. We have to look at these numbers for what happens when we increase productivity, when we start saving, 10, 15 minutes a day for a given task. Like, this is huge. And so at the end of the day, these simple numbers, these simple finance 101s is what we have to run through on every single project for every single billable rate, and to look at our profit numbers on what happens if we increase productivity. If we start using productivity tools, again, a piece of software, a better tool, what have you, what does that do to our bottom line numbers, so long as our projects may stay the same, all that kind of stuff. And that's not even to include things in employees and recruitment. Usually you're paying like a 30% recruitment fee for a person. So again, if they have $100,000 salary, you're paying $30,000 in order to even bring that person into your organization to the recruiter that went and found that talented person. So something to really consider, something to really look at when it comes to, these types of things for folks, is you've got to know your numbers, you've got to put them together, and you've got to really understand how much drops to bottom line profit that you're missing out on by not using productivity tools. So that's going to be this episode of the Construction Corner podcast. Thank you all so much for listening. I hope you have a wonderful Thanksgiving, and until next time.